Welcome back to Investing Talk Podcast. Today we're zeroing in on a company that's truly aiming for the stars, Rocket Lab. The big question on everyone's mind, especially yours, our listener, is Rocket Lab a good time to buy now? Our mission today is to break down everything you need to know about Rocket Lab. We'll cover its latest financials, its market position, the risks involved, and what the experts are saying. Our goal, as always, is to give you a clear, comprehensive picture. Before we jump in, please remember to subscribe, like, and leave a comment. And hey, if there's a specific company you'd like us to look into for a future analysis, please let us know in the comments below. Rocket Lab. It's a name that frequently pops up when we discuss the high-growth space sector. It's seen as a real innovator, but what does the data really tell us about its investment potential right now?
It's an incredibly exciting company to look at right now, precisely because of those dynamics you mentioned. What makes Rocket Lab particularly interesting for investors today, especially with the aerospace industry evolving so fast, is that dual role. It's not just a launch provider, it's also a space systems company. They're building kind of an integrated ecosystem. The big questions swirling around it really revolve around how it manages that ambitious growth, the significant capital investments, alongside the current challenges in actually turning a profit. And all this is happening in a fiercely competitive and, frankly, capital-intensive sector. Investors are basically looking for that roadmap. When will these big investments start paying off with sustainable profits?
Okay, let's start by getting a clearer picture. What exactly does Rocket Lab do? Most people know them for their core business, right? Launch services, helping other companies get their stuff into orbit. Their Electron rocket, the one for small to medium launches, that's pretty well known. But they do more than just launch. They're also involved in spacecraft design, manufacturing.
Right, and that's key. They don't just stop at launch. What really carves out their niche is this vertical integration you hear about across both launch and space systems. Essentially, they're trying to be a one-stop shop for certain space missions, designing the satellite, sending it up, the whole package.
That vertical integration point seems important. How does that play into their financials? Because I hear mixed things.
It does, and it leads to this fascinating contrast in their financial story. On one hand, Rocket Lab has shown really impressive top-line growth. If you look at their trailing 12 months revenue, the TTM number, it hit $504.26 million. Even more striking, their fiscal year 2024 revenue was $436.21 million. That's a massive 78% jump from $244.59 million in 2023. I mean, that kind of growth is undeniably strong.
78% growth, wow. That sounds fantastic, especially for this sector. But what's the flip side? Are those rockets actually, making money yet?
No, that's the catch. Despite its incredible revenue surge, the company is still unprofitable. The TTM net income shows a pretty significant loss, minus $231.31 million. The annual loss was around minus $190 million. And their earnings per share, or EPS, it's negative $0.46, so no profit per share. Now, this isn't totally uncommon for high-growth firms, especially in these kinds of emerging industries. It's largely down to massive ongoing investments in R&D and just scaling up operations aggressively. Analysts actually expect the strong revenue growth to continue, but they don't see profitability coming in the near term. Rocket Lab is still very much in that heavy investment phase.
Okay, here's where it gets really interesting and maybe a bit confusing for investors. You have this huge market capitalization, what is it now? Over $21 billion. How do we square that number with these ongoing losses, this lack of profit? It signals a huge amount of investor confidence, right? Despite no current profits, it also suggests they're probably still burning through cash pretty quickly, which means they'll likely need to tap the capital markets again for funding down the line. So what's the market really seeing here that justifies that kind of valuation? Is it just hype or something deeper?
Well, I wouldn't call it pure speculation or hype. The market isn't just buying today's launches. It's buying the future. That $21 billion valuation reflects a massive bet on Rocket Lab's potential, its optionality. Investors are basically betting they can become, maybe, the AWS of space for small to medium missions, controlling everything from satellite design to launch, locking in those valuable defense contracts. It's a wager on tomorrow's market share, not today's P&L statement. And yeah, this pattern, high growth, losses, cash burn, it's pretty standard for early-stage, capital-heavy aerospace companies. Investors are looking way down the road, betting these big upfront costs will pay off massively later as the space economy matures and Rocket Lab carves out a dominant slice, especially with that integrated strategy. But for anyone watching their money, the big question is the timeline. How long until those investments pay off? It really comes down to your conviction in their long-term plan and their ability to execute.
That makes sense, framing it as a bet on future dominance and that whole integrated package. And building on that, Their edge isn't just the rockets, it's that vertical integration, their niche in small launch. And they've made some smart strategic moves lately, haven't they? Like acquiring GEAST, that developer of advanced sensor payloads?
Yes, that was significant.
That seems specifically aimed at landing bigger, higher-value defense and national security contracts, right? Plus, they got that $23.9 million CHIPS Act award. That's about boosting domestic chip manufacturing for space stuff. So these aren't just isolated wins. It looks like a real push towards more government and defense work. How big a deal is that pivot?
Oh, it's crucially significant, absolutely. It's about de-risking their revenue streams and seriously boosting potential margins. The commercial launch market. It's growing, sure, but it can be volatile. Lots of pricing pressure. Defense contracts, though, they offer stickier, often multi-year revenue, usually on better terms, too. The GS deal puts them deeper into the intelligence data side of things, providing solutions, not just rides to orbit, and the CHIPS money. It's not just cash. It cuts their reliance on foreign chip supplies, makes them strategically more important for national security, and, well, a more resilient company overall. And these moves are underpinned by some solid operational achievements, too. That builds credibility. For instance, completing their 70th Electron mission. That's huge for perception of reliability.
70 missions, yeah.
70. That's a big number for any launch provider, especially one focused on smaller payloads. It really speaks volumes about consistent execution.
70 missions is a serious track record. Looking ahead, though, what are the next big operational pieces falling into place?
The really big one on the horizon is finishing that new Neutron launch pad, projected for September 2025. This is absolutely critical for their heavy lift rocket Neutron. Neutron is their strategy for moving beyond just small lift. Tackling larger, potentially more lucrative missions, it means competing in a different market segment, maybe even against some of the bigger players eventually. It's a key piece in achieving that future market dominance we talked about. Shows they're serious about scaling up their capabilities.
Right, Neutron. That's the big one. Now, shifting gears to the stock itself, investors know it's been an absolute roller coaster this year. We've seen incredible swings. I mean, the 52-week range is something like $5.74 to $53.44. Huge. Recently, it's been trading between, $43 and $51 roughly. Closed around $49 the other day. And get this, the stock is up nearly 90% year-to-date in 2025.
Incredible run.
But it's also seen pullbacks, like that 11% drop on September 3rd when investors seem to get spooked about the valuation. So this wild ride, what do these price moves and recent dips tell us about the stock's technical health right now?
That's a great question. Because, yeah, that year-to-date number is eye-popping, but the recent action needs a closer look. Despite those pullbacks, the longer trend, since January 2025 has been broadly bullish, pretty significant upward acceleration over the last 6 months or so. Now, looking at the technicals, the 14-day RSI, the Relative Strength Index, is currently at 32.63. That puts it near, but not quite deeply into technically oversold territory.
So maybe the selling is getting tired.
Could be. It suggests the recent dip might be nearing exhaustion, maybe a bounce is possible. Also, its beta is 2.18. That confirms it's highly sensitive.
Meaning it moves more than the market.
Exactly. If the market moves 1%, Rocket Lab tends to move about 2.18% in the same direction. Yep. So high volatility is just part of the package here. Key levels. We see immediate support around $43. That's near its 50-day moving average. Stronger support is way down at $28.48, the 200-day moving average. Resistance is up at that year high of $53.44. We've definitely seen sellers step in above the $50 mark recently.
Okay, technicals are interesting. What about Wall Street analysts? We often look to them for guidance. What's the consensus there?
Well, the analyst view on Rocket Lab is generally positive. The overall rating among the 13 analysts covering it is basically a buy or moderate buy. Price targets do vary, though. Most recent ones seem to cluster in the $50 to $55 range. You've got Needham at $55, Cantor at $55, Stifel $55, Bofo and Citi both at $50. It's worth noting, though, there is an outlier. Goldman Sachs has a target way down at 27 cents. That pulls the average down quite a bit.
Okay. So the average target is?
Currently, the average analyst target is $42.27, which, interestingly, is actually a bit below where the stock is trading right now.
Below the current price.
Yeah, but again, you have several top-tier analysts who remain quite bullish with those much higher targets. So it's a mixed signal from the average versus the top end. As for broader sentiment, social media buzz seems neutral right now, and the Fear and Greed Index is at 39, which indicates a bit of investor caution. That gap between the average target and the current price, it could reflect different time horizons analysts are using or different valuation models, but the overall picture seems to be, caution mixed with general optimism.
Okay, so with all these moving parts, financials, strategy, stock action, analyst views, what should we be looking for next? What are the upcoming catalysts? Things that could really move the needle for Rocket Lab, short term or long term.
Good question. Short term, definitely keep an eye on the Q3 2025 earnings release that's scheduled for November 6th. That'll likely impact sentiment significantly. Beyond earnings, just the ongoing pace of Electron launches matters, and any detailed progress updates on Neutron will be huge. Plus, potential new government or defense contract wins. Given that strategic shift we discussed, another big contract could be a major catalyst.
And longer term.
Longer term, it's all about Neutron's successful commercialization and, crucially, its maiden flights. That's potentially company transforming. Also, the full integration of GEAST, seeing them actually win new defense business because of that acquisition. And then there are the broader sector tailwinds. Just increased demand for small satellite launches, more defense spending in space that could lift all boats, including Rocket Lab.
What about market chatter? Any significant rumors or speculation bubbling up that could act as catalysts?
Oh, there's always market speculation with these kinds of growth stories. You hear whispers about a potential strategic partnership, maybe with a major aerospace or defense prime contractor. That could bring in serious capital and expertise. There's also talk about potentially larger U.S. government launch contracts, especially given their track record and defense focus. And the usual speculation about maybe getting included in major stock indices like large cap ones. That could trigger a lot of institutional buying. But, and this is crucial, you have to balance all that potential upside with the very real risks involved.
Exactly. Always comes back to risk versus reward. For anyone thinking about investing, understanding those risks is just as vital as seeing the potential. So what are the big ones? The significant risk factors people need to keep front of mind with Rocket Lab.
Okay, stock-specific risks first. The persistent losses and the uncertain cash flow situation are number one. Ongoing net losses mean we just don't know when they'll hit profitability. That creates the risk they might need to raise more money through selling stock, which dilutes existing shareholders, or taking on debt. That cash burn rate is key. Then there's huge execution risk. Any delays or, heaven forbid, failures with Neutron's development, or launch failures with Electron, losing a key contract. Any of those could severely damage their growth story. Customer concentration is another one. If a key customer or government partner decides to launch less, that could hurt.
Makes sense. What about broader market or sector risks?
Right. Rocket Lab is a high beta stock, remember, so it's very sensitive to macroeconomic stuff, interest rates, general funding conditions, big swings in the overall stock market. And the space sector itself, it's intensely competitive. You got SpaceX, obviously, but also emerging players like Firefly, Astra, tons of competition putting pressure on pricing and forcing constant innovation. And finally, policy risk. Changes in government space priorities or national security needs could totally change the contract landscape, for better or worse.
Okay, so after weighing all of this, the incredible growth story, the smart strategic moves the analyst takes, the stock volatility, and those undeniable risks, what's the overall assessment? How do we rate Rocket Lab as an investment opportunity right now?
You've nailed the central tension there. Our overall assessment for Rocket Lab comes in at a 6.5 out of 10. The strengths are clear. That strong revenue growth, really solid execution. I mean, 70 Electron launches isn't trivial. The increasing pivot to the defense sector and good support from major analysts. These point to potentially solid long-term fundamentals.
But the concerns are just as real.
Exactly. The concerns weigh heavily too. That high valuation compared to its current lack of profit, significant operational risks launch, R&D, supply chain, and its clear dependence on friendly capital markets to fund growth. And technically in the short term, the stock looks a bit stretched after that huge run-up this year. Neutral market sentiment and those average analyst targets sitting slightly below the current price. It does inject some near-term caution.
A 6.5 out of 10 really highlights that balance, that tension. Given that, what kind of investor is Rocket Lab really suited for? Is this a stock for everyone?
Definitely not for everyone. Rocket Lab is much better suited for investors with a long-term horizon. You absolutely need a high tolerance for volatility, and you have to be comfortable with the execution risks inherent in these early-stage aerospace innovators. If you're looking short-term, the stock could easily be vulnerable to profit-taking or just broader market downturns, especially after its massive run and with sentiment currently neutral. For any investor, though, watching that cash burn rate and the risk of potential dilution needing to sell more stock, that's absolutely critical. Look, if management hits those Neutron milestones, fully integrates Juiced, and if the small satellite market keeps booming, Rocket Lab could deliver fantastic long-term returns. It's a compelling story. but it's a story that comes with a significant helping of speculation and risk baked in.
So to recap, Rocket Lab really presents this dual nature for investors. On one side, you have immense potential in a super exciting growing sector. On the other, you have the significant inherent risks of a high-growth, capital-hungry company that isn't making money yet. Precisely. And that leads to the final thought for you, our listener. Given the incredible, almost sci-fi potential of the space economy unfolding, how much risk are you personally willing to take on for a potential piece of that future? Does this mix of cutting-edge innovation and financial uncertainty excite you, or does it frankly give you pause?
That's the core question, isn't it? A great thought to ponder. Don't forget to subscribe, like, and comment, and please do let us know which companies you'd like us to look into next. Your feedback really does help us shape these conversations for you. Thank you for joining us on Investing Talk Podcast. We look forward to our next conversation.